Welcome to our Savvy series. I'm Catherine Magaña here with Rachel Ivanovich, and today we're going to have a discussion on money after divorce and what women need to know about protecting their wealth and planning ahead. So when you think about divorce, obviously, if you're not, sometimes you're not planning on it, but this is definitely a transition in life that happens, and unfortunately, we are seeing it more and more. And so divorce isn't just that emotional transition. It's really a financial turning point for some people and really giving them a chance to kind of take control of their lives and what their future looks like. And so whether your marriage lasts 5 years, 10 years, 20, 30, 40 years, there's different plans and different ways that you can process. And obviously, looking forward, what we find is sometimes those that come to us before divorce, sometimes they want to know, do I have enough, or what do you think the financial impact is going to be? And then sometimes we meet with some women that come in right in the middle of the divorce, and they're just, they're not ready yet because there's so much change and so much going on. And then sometimes we meet with women that come in after they have their settlements, and that tends to sometimes be a little bit harder because you already potentially made some decisions that we might have made a little differently. And so it really depends on where you're at in that process, but we are seeing this more and more.
We actually have seen this a lot this last couple of years. And so a lot of questions people have is, how do I protect my wealth? Yeah. What steps do I need to take immediately? And how do I rebuild my confidence and clarity and have clarity around money? And that's what we're here for. So if you'd like, contact us at 760-692-5700. We'd love to hear from you.
So let's dig in the financial landscape after divorce. So when you kind of think about it, divorce, you're basically cutting your income in half and your assets in half. And so once
your expenses double.
Yeah, I know.
You have two households.
Yeah. Or at least then you maybe are used to, you have your expenses, and how much are you really spending? And we actually have a client we've been working with. She came to us kind of towards right when they're finalizing their divorce, and she seems happy and she seems at a good place, but then it's now revisiting the expenses and making sure, okay, what am I really spending? Because I think sometimes you plan, but you don't really know until you sit down and look at those expenses.
And a lot of people have a hard time putting together a budget. And so one of the clients recently that went through a divorce, we went to coffee and we sat down. She brought her bank statements and credit card statements. We went through it and got her started. And once she got started, she was like, this is kind of fun.
I know.
And
it's just the idea of it sometimes.
Yeah.
It gets a little daunting, but
exactly.
But once you do it, it becomes, and then it's good to know, like, what am I actually spending my money on?
And there are a lot of hidden complexities. There are joint accounts, retirement accounts, real estate, do we own businesses, and even, debt and what happens to that either during or after divorce.
And then you have your divorce settlement. So once you've decided how are we going to divvy up the assets and money, we actually had a client, she came to us after the divorce. She ended up, and I think I've shared this in the past, but she ended up with the house because she really wanted the house, but then she couldn't afford the house. And so she ended up having to sell the house. She downsized and bought something else, and then kind of which was better for her. And then she was able to kind of build her career. And so life was good after, but sometimes keeping that home.
It can be a cash flow drain in retirement too.
And it's something, sometimes it's that emotional connection. Like, I want this, but the reality is it's expensive. And then you kind of look at, what's your mindset about money and rebuilding, and obviously, or maybe this is something you never talked about, financials and the information. So this might be a whole.
And sometimes when you're going through a divorce or you're just been through a divorce, it's easy to shift into like a short-term survival mode mentality. And so you really need to be shifting your mindset into, I need to rebuild my wealth in a strategic way. And so get out of that survival mode and let's get you somewhere where you actually can rebuild productively.
And then, so another segment is common mistakes to avoid. And so thinking about, obviously after you've gone through the divorce, have you updated your wills and your trusts? How about your beneficiaries on your 401ks and
life
your
insurance.
IRAs? And so making sure everything's been updated. And then obviously with the retirement accounts, if there's quadros in place, which are the qualified domestic relations orders, did those get fulfilled? And those seem to take a little bit of time, based on what I've seen in the past.
So basically what the quadro is a way to move, let's just say you received a portion of your husband's retirement account, pension, or 401k. And so it's a way to move that over so that you're not paying tax on it. And then it now is in your name.
Yep. And then I guess taxes. I mean,
Taxes, exactly. Yeah, so you really need to be looking at property settlements. Are you receiving alimony or spousal support? Are you receiving child support? And really know what the tax implications are of these things. And as I mentioned, a qualified domestic relations order quadro, you can move that money over and not pay tax on it. In the past, alimony was taxable when you received it, and it was deductible for the person who paid it, but that changed at the end of 2017 and was made permanent under the One Big Beautiful Bill Act. But it is really important to, talk about, because when you get divorced, you go from usually filing a joint return to filing a separate or single, or maybe you have children or a relative who lives with you. So definitely want to have that conversation with your tax advisor.
And then depending on which assets get moved, so once again, there's the IRAs, which you can defer taxes, but if there's taxable accounts, and then if you sell investments, there could be tax consequences too.
Yeah.
So there's a little bit more to it, and obviously speak with your tax advisor for your specific case. Yeah. And then, like we talked about earlier, is looking at your credit and building your credit. I think that's important. I don't know in the past if you had credit cards in your name or not, or how you had that, but that's definitely something.
Yeah, if you weren't the primary credit holder or the loan on the house was maybe in your husband's name, it's really important to make sure you're building an independent credit history.
And then you have to think about women do outlive men, and women live a long time. So you have to really consider, how old am I, and what's the longevity in my family, and how, because your money needs
how many
to
years
last.
of retirement do I need to plan for?
Yeah.
25, 30 years. It could be.
And then if you are getting some alimony, and then
when
does that end, or if and then how does that impact your plan? So it is important to look at kind of now your own specific.
It kind of
financial
flows
plan.
into cash flow,
Yeah.
which is something that you really need to be creating a realistic budget. Post-divorce budget that reflects your new life, and sitting down and redoing the numbers, even if you know kind of, this
you
is
might
how
have did
much.
some projections before, during divorce, or before, but
what are the numbers really? Because garbage in, garbage out.
Yeah, and that's where even when we do planning, it's if we don't have the right information,
Numbers.
then it's not.
The plan's not valid.
Exactly.
Yeah.
And then kind of as you're protecting and rebuilding your wealth, looking at kind of investing with intention, and really seeing how is my money positioned, and do you need income from your money? Do you need growth, or and what type of assets are we looking at? We actually had a client that we worked with. She came to us after she got divorced, and she ended up having some assets that were in her name, but they were very, very conservative. And so we ended up kind of having conversations, and she needed a little more growth. So we kind of repositioned and made sure she felt comfortable, but we had some different investment strategies that she could still get income, but also have her money grow for her.
Yeah, it's important not to stay in cash because you're scared. I mean, we met with a prospect this morning, and she came in, she wanted to be conservative, but then what was it that she said? It was something along the lines of, as long as she's educated?
Yeah, and I was in that, because she's in the education field, so I was like, which is true. That's why we're here. We want to educate and help and help you understand, and then as you understand more, you make
And she said she would be willing to take a little bit more risk if she understood the investments.
Exactly. And then it's looking at Social Security and spousal benefits. So if you were married over 10 years or more, you potentially could be eligible for benefits based on your ex-spouse's record. So once again, factoring that into your plan, or when you do go get benefits, making sure that gets looked at as well. And then kind of building your team. I mean, obviously we're here, financial planning,
Don't
tax
go it
planning,
alone.
yes, and an estate planner. Yeah. And then depending on your age, there's Medicare specialists that we recommend as well. So definitely, as you're kind of phasing into retirement, having your kind of professionals there to help you make decisions.
And so divorce can really leave you feeling financially disempowered. Yeah. So I think building confidence is just as important as building your wealth.
Yeah. Well, and it's such a divorce can be emotional. There's a lot of feelings that can be involved, and so
it's hard.
It is, and I haven't gone through it, but I know I've seen it.
It's rough.
So I know, and so it's one of those things that I think taking small actions, like you mentioned, becoming empowered and making little steps towards it.
Track your accounts, know what you have, know what your budget is, log into your portal, and then, set one little goal. But and maybe meet with your advisors a little bit more often, right after or before the divorce, so that you really have goals. And I met with one woman for coffee this week, and she's been through a divorce, and she has a yay me journal. And so she's
fun.
And so I was like, you know what, carry that journal around with you, and whenever you feel like you have a win, like, it doesn't mean you have to celebrate big, but celebrate, write yourself a note, or go out for a coffee, or treat yourself to something, but like, make sure you're setting some goals. And she's like, I just feel so overwhelmed all the time. And I said, well, just write one thing down every day that you want to accomplish. And she's like, only one thing? I was like, yeah, that
I
can
think
be.
when you break it down sometimes into like one thing, do one thing, it's like, oh, I can do that.
Yeah, because she's like, I feel like my list is a mile long, and I feel like I'll never get it all accomplished. And I said, well, just pick one thing every day. And so
I like that.
I do too.
So if you're navigating through this transition, please reach out to us. We're happy to have a conversation, or even if you're not ready, just having a cup of coffee, or just, we don't want you to feel like you're doing this alone. And we do have a lot of resources. And there's a lot of moving parts, and we're happy to be a resource for you. If you'd like to set up a call with us, or if you'd like to set up a strategy session, you can reach us at 760-692-5700. And we want to thank you for getting savvy today with us about your finances. And remember to savvy up. Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results, and the indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Savvy Woman Wealth Management is a registered investment advisor with the SEC.